Hi, this is Sean Casey with Trade Canary, and today we're going to look at how to buy a stock using ThinkorSwim. ThinkorSwim is free software you can download and use that connects to your Charles Schwab account. I love this. It has a lot of features. Don't be overwhelmed when you look at this and see all the different things you can do. Just focus on the basics to start with, and then you can work your way up. But you're going to find you'll love this as you get used to it and you start knowing where to look and what you want to do. So to buy a stock using ThinkorSwim, the first thing you'll do is log into your account, get it once you get it all connected up, and then we're going to go up here and click on the trade tab. When we do, we're going to go to this screen and we can put in whatever stock we want to buy. Let's say we want to buy Tesla. We would type in Tesla, see in the drop-down menu that it says Tesla, click on that, and it will get us the latest information. It will also pop open the options chain down here, and I'm going to close that so there's less things to look at on the screen, but we'll get some information on the stock. We'll see that it closed the day because we're after hours trading right now, 354.11 at 4 o'clock close, lost $1.73. The current bid and ask price, the size of the bid and ask, today's volume of 51 million, the open, the high, and the low prices. So we get a little snapshot of the way things look like here. I could put in, let's say, NVIDIA, and if I type that in, again, we'll verify we have the right stock. Click on this and it'll close that options chain for you. And we'll see, again, the same information as what has been going on. Again, we'll see this is aftermarket. It closed at 139.40. In the aftermarket, it's down maybe 50 cents or so, right? Once I've gotten to this screen, I've got the stock that I want to trade. There's a couple of ways to open the actual order entry window. One of those is you can hover over the bid and ask if you wanted to sell, because it would assume you want to sell at the bid price, or you can buy at the ask price. That's what those little buttons that you can maybe see a little tiny pop up there. But if I click on this, it would open up the order entry window. I'm going to delete that again for a second and come in here, and I'm going to right click. And then you could see it's very easy to tell. I'm going to buy or I'm going to sell the stock. And then there's some things you could do with buying custom, buying, selling custom, a lot of different options, but let's stick to the basics to start with and click on buy. And that opens up this order entry window. That this shows is green right now. Green means I'm going to buy. If it was red, that would mean that I'm selling. This is a good double check so you know that you're taking the action you think you're taking. Obviously, this is a stock we're going to buy. Right now, this shows the value in units, which in this case would be stock, shares of stock. If it was options, it would be option contracts, etc. I can change that. I could say that I want to buy or sell 100% of or some percentage of an existing position. I don't have any right now, so that doesn't apply, and it's also more complicated. And then you could also only invest a specific dollar amount in this stock. I'm going to pull back to shares of stock. This is the way that I think, and I'm going to do that. I could click up or down here to increase the number. I can type in an exact number. Let's say I just want to buy 8 shares of stock. Don't worry about the plus. They have the plus in there so you can tell it's a plus. If you're selling, they put a minus in there. Position effect, generally auto is going to be right because we're buying to open. If you'd only be buying stock to close, if you'd sold stock short. And if you're not familiar with that, it's a more complex thing and it's beyond the scope of this particular video. Then we see NVIDIA stock, and we have a price of 139. You're going to see this bump around, but it's going to keep moving for the moment along with the ask price unless I put a specific number in here separately. See how I just moved to because the ask moved up, it assumes you want to buy it at that price. But we can set our own price, and we'll do that in a minute. We are going to place by default a limit order. Limit means that you're going to pay the price you put in here or less. That's a good way to make an order, especially in your first order if you're just starting out, because then you don't get a crazy number. You have a lot of choices here. One is you could place a market order. Market means you get whatever the market is at that time. You might think you're paying 139 and you end up paying 139.50. Market orders, the only reason to place them is a fast-moving market and you're really certain that you want to dive in. Much better off placing at the very least just a limit order for what you want to do. There are some more advanced types of orders. We could place a stop order. A stop order will basically execute when the stock reaches a specified price. If we're going to buy using a stop order, which in this case is not something you'd want to do normally, but I could say, oh, I want to buy if the stock goes back to 138, then I want a market order. But again, you wouldn't necessarily get 138. You might get 137.75. You might get 138.25. It's going to execute at the market once it triggers at 138. The difference would be that I could place a stop limit order and say, hey, listen, if it goes back to 138, I want to pay 138.05 or less. Or you could, right? I can say I'm willing to pay that much or less, but I'm not willing to, if it bounces right back up to 138.50 by the time you execute, I won't pay it. I want to get at least a 138 number, which makes this much like a limit order in terms of doing this. But where the people will use this, let me just go back to the basic stop so there's less numbers, is if they're trying to trade the momentum of a stock. Right now, the stock's 139.40 on the last close, but we think that the stock is going to break out and go to a much higher number. And we might say, look, I don't want to buy this stock until it actually goes up, because then if it goes up, I know that it's on a run, or I think it is anyway. And therefore, if it hits 145, I want to buy it, because then I think I'm going to buy it at 145 and it's going to go higher. And I want to trade that momentum of the stock and trade it higher. That would be the reason that I could use this kind of order. And again, I could make a limit that if it hits 145, I'm only willing to pay 145 or 145.50 or whatever number, because this could happen where it gaps out and it not only triggers the 145, but now it's at 148 or 150. And then I would be paying a much higher price at the market. So the limit side of this can be very helpful to protect you from overpaying. A trailing stop order. This gets a little more complex here. And you can set this as a percentage or as a dollar amount. And for buying, this is not normally something you would do, but I'll explain how you could do it. We could set a trailing price. Now, the trailing price means this. The price was 139.40, and I'm going to set my trailing price at $2, which means that the trailing price is actually 137.40. By doing that, the system knows that immediately if the stock drops back the $2 from the current price of 139.40 to 137.40, it should execute a market price to buy. But this trailing stop order will move up. Let's say that the stock has never come back $2 from the current price, and it's gone all the way up to 150. Now my trailing price is 150 minus the $2, so it's $148. Then if the stock were to back up to 148, this order would execute and I would buy. That becomes very complex, probably not the way in which you want to set your order to buy, but you can do that. This is quite effective on the selling side when you're trying to follow a stock up and you want to let your profits run on a situation, but you want to protect yourself from it dropping back a lot. But buying, much more complex here. And again, I can set a trailing stop and then set a limit order of what I'm willing to pay, but that, you can see how that gets a little messy, but it is something you can do. You also have a choice to sell or to buy, at the market on close. When the market closes at 4 p.m. Eastern, it would execute an order to buy your stock at whatever price that is, up or down from where we are right now. You could also have a specific limit order on close if you wanted to as well, and that would be the LOC order. Let's just go back here, change this to limit, make things much simpler for us, and have it listed right now that we're willing to pay 138.05 for the stock. Then we have to decide how long the order is good for. Right now it defaults to GTC. GTC stands for good till canceled. This order would stay open not just for the next trading day, but endlessly until we turn it off. That's a good way if you're looking to buy a pullback, right? If you're looking for a shorter term range, you could just trade for the day. And for the day would mean, in this case, the market's closed. So the next trading day, if I place this order when the market's open, that would be for the time the market is actually open. We could also trade for the day with extended hours. Extended hours, trading starts in many stocks at 7 in the morning, goes till 9:30 for the AM extended hours. The markets open its normal time from 9:30 to 4 usually, and then from 4 to 8 p.m. is the PM extended hours. There's no reason if you're setting a specific price to not trade the extended hours as well. So we could place that to be for the day for extended hours. Or we have a choice. We could do it good till canceled and include the extended hours trading, which if we were looking for on a longer term basis for our investment, we could do that. Or we could trade extended hours only for the day, good till canceled extended hours, or only the AM extended hours, or only the PM extended hours. You get a lot of choices here. But unless you have a specific reason why you want to limit your opportunity to buy at the price you want, you'd either want to be normally the extended hours, which is good for the day, or the good till canceled extended hours. So it gives you the best chance to get the price you want. So let me put this in. You don't have to put in any instructions. Exchange defaulting to the best option to get you your price. That's great. And then we can click on confirm and send. This is how we review exactly what we're going to do. And in this case, you can see we're buying NVIDIA. Again, it's green. It shows us we're going to buy, shows the last price, the current bid and ask. Again, this is different because we're in aftermarket trading. It only shows the last closing price here. Our order description, I'm going to buy 8 shares of NVIDIA at 138.05. That's the limit price. I won't pay more than that. This is good till canceled, including extended hours. The cost of the trade, 1104.40, plus there's no cost commission in this case. 1104.40 is my cost. It has very little. It's going to cut my buying power by 331. That means I still have $126,000 in buying power for stock. My buying power for my options, 58,000. This is just a double check. You know whether or not you have enough money to do this. You haven't. It doesn't limit what else you want to do. You can double check this. If you have more than one account, you could click here and switch accounts that you're going to do this in. If you're happy with this order and you're ready to place it, you can click on send the order and it will place the order. You could save it for the future. You could edit this order, which would take you back to the other window and you're able to work with that. Or you could click on delete. So you have a lot of different things you can do here if you're not sure. And if you ever place the order and then you think, I want to change that, you can actually go to another screen and you can delete the order or change the order if you want to do that, as long as it hasn't been filled yet. You always have the chance to cancel that order and not have to do that. This is it. I gave you a lot of information, but now you know how to buy a stock using ThinkorSwim. Again, ThinkorSwim connects to your Charles Schwab account. So that's where when you buy a stock using ThinkorSwim, it's going to show up in your Charles Schwab account and you could use it there and sell it or sell options on it or do whatever else you want to do with it. Or you can come back to ThinkorSwim to sell the stock. I hope this has been helpful.